In this lesson, we're going to be talking about understanding some accounting terms and some key financial reports. The great thing about working with QuickBooks is you don't have to be an accountant. You don't need to know debits and credits because QuickBooks does all that in the background for you. You just enter a check and it does the journal entries for you. But it does help a lot to understand some key accounting terms as well as the financial reports so that you have a better understanding of how things work. So let's talk about a few of these basics. In QuickBooks, I'm going to go to the chart of accounts. So I'm going to go to Lists, Chart of Accounts, and we're going to talk about some different account types to help you to understand this a little bit. Over here, you'll see in the chart of accounts, I have different types of account. Bank accounts, that's easy to understand. That's your checking account, savings account, perhaps a money market account. So you have your bank accounts. Also, PayPal would be a bank account because you still have money that's going in and out of it. Accounts receivable, that's money that your customers owe you but have not paid you yet. Other current assets will include some things such as inventory, perhaps employee advances. So these are some things that are assets. Assets are things that your company owns. So assets might be current or they might be long-term, such as fixed assets. Fixed assets are furniture and fixtures. It's vehicles, your buildings. It might include land. So the fixed assets are things that are going to last longer than a year. Now, this is where you need to use some, common sense. For example, if I go buy a stapler at the Office Depot or Office Max or something, a stapler is probably going to last me longer than a year. But it's also like $10 for a stapler, so you don't really need to set that up as a fixed asset. However, if I go buy a computer that's $700, then I should set that up as a fixed asset. This is where your accountant or tax professional can help you with depreciation and how to do this for tax purposes. So I would encourage you to still seek the help of an accounting professional. But your fixed assets, you should have some threshold depending on the size of your business. Maybe if it's over $300, maybe it's over $500. Really large companies might be over $1,000, but at what point do you set it up as a fixed asset? I wouldn't set up a stapler or a hammer as a fixed asset. Higher dollar items, you need to set those up as a fixed asset. Then as we come along, we also have accounts payable. This is money that you owe to your vendors. Perhaps it's rent expense or you've got telephone bill or utility bill, insurance. Accounts payable is money that you might owe to suppliers. So that's the bills that you have not paid yet. You might have some credit cards set up where you're buying things with your credit card. You would want to set up a credit card type of account to track those purchases. Then we get into other liabilities, other current liabilities, things that are due within a year. This would include all kinds of things like payroll liabilities and sales tax payable, money that you owe that needs to be paid within a year. Our long-term liabilities are things that are going to be paid more than 1 year. A truck loan, a car loan, a mortgage on the building that you purchased, a note payable to the bank. Those things are long-term liabilities. Then we get into our equity section. And equity is going to vary depending on what type of entity your business is. If you're a sole proprietor, you will see owner's draws and owner's contributions. If you're a corporation, you're going to have common stock. So the equity section will vary depending on what type of business you are. I would encourage you again to get some help from your accounting professional. Make sure you're accounting for things properly based on your type of entity. Then we get into the income and the expenses. All of the accounts that we just talked about, the assets, things that your company owns, the liabilities, money that you owe to other people, and the equity, all of those show up on the balance sheet. And I'm going to show you that report in just a second. The accounts that we're talking about now, income and expense accounts, show up on your profit and loss or your income statement. So here we have different income accounts. Income is money coming in from your customers, the money that you've earned. Then we get into cost of goods sold. What are the direct costs of your sales? If you're a retailer, when you buy inventory, your inventory is a cost of goods sold when you sell it, the cost of your inventory. If you're a contractor, your cost of goods sold might be direct labor, direct materials. Again, talk with your accounting professional if you need some help in this area. Then we get into all of our other expense accounts. We have automobile, fuel, and insurance, bank service charges, insurance expense. We might have payroll expenses, office supplies, rent, repairs, all these different expenses that your company has to pay. Your business expenses should be in here, not personal expenses. You want to keep business and personal separate. So all of these account types are already set up in QuickBooks by type. You cannot change the type that's available. You can only choose from these type of accounts. QuickBooks uses this to create your reports. Let's look at a couple of key financial reports. Under Reports, Company and Financial, we talked about assets, liabilities, and equity. Those show up on your balance sheet. Your balance sheet are the things that you own under assets, your checking, your savings, accounts receivable, those other current assets. Then your fixed assets gives you total assets. Then as you scroll down, you have your liabilities, accounts payable, credit cards that are payable, other current liabilities like your federal payroll taxes, your state sales tax payable, all of your liabilities, and then down at the bottom you will have your equity section. So your balance sheet are the assets, liabilities, and equity. Then on the other key financial report under Company and Financial, Profit and Loss Standard. This is where you will see your income, your cost of goods sold, and then on down to show all of the different expenses that you have. Down at the very bottom, you'll see your net income or net loss. So it's important to kind of understand a few of these key terms so that when you're entering things, you kind of understand if you're writing a check, was it for office supplies or did you buy a new computer? Should you post that to fixed assets? So hopefully this little overview will help you a little bit. But again, if you need some more help, talk with your accountant or your tax professional to ensure that you're accounting for things properly. But this overview should help you a little bit with some of the key financial reports and some key accounting terms to help you get started with QuickBooks.